Hello, everyone. Are you all having a good time at Web Summit? A little better. Let's get some energy. We're going to talk venture capital. You guys having a good time? That's great. My name's Eric Rosenberg. I'm a financial writer based in California. I cover a wide range of fintech topics, and I'm thrilled to be here with this great group of venture capitalists. You guys can all introduce yourselves probably far better than I can. So let's start with Patricio. Could you please let everyone know who you are?
Thank you very much. So my name is Patricio Aznar. I'm a managing partner of Reach Latam. We're an early stage VC fund out of Mexico City. We invest in tech companies solving the biggest problems in the region.
Hi everybody, Steph Chu. I'm a general partner at Portage Ventures. We are a global fintech focused platform with two different strategies. The strategy that I spend most of my time on is a seed to B fund that we invest $5 to $35 million lead checks into fintech companies globally.
Hi everyone, great pleasure to be here. Thanks again. I'm the Brazilian on the panel, I think. So I'm Anderson Tees. I've been investing in ventures since 2003, so a few years. And more recently, together with Manuel on the audience there and the team, we are building a new platform for venture investing with Itaú, which is the largest financial institution in Latin America.
Edith Yeung, general partner at Raise Capital. We focus on pre-seed, seed, all things infrastructure software. It means all of our founders, their customers are developers.
Well, thank you, everyone. So we know that the financial world is a bit volatile right now. We've been seeing bank failures, but there's still these wonderful startups looking to get funding. So what do you see now as the current kind of temperature of the venture capital markets, and what do you foresee over the next 6 months?
So from our point of view, we think that everything that happened in 2021 is a reference of what's supposed to happen in the VC world at the moment. What we believe is that the ecosystem got cleaner, if you want to use that word. Companies with good fundamentals are still being funded. We believe it's a good time to invest in Latin America. 2021 we had huge valuations, easy money, and now I think the original investors stayed, and maybe the tourists that were doing investing in the region just stepped away for a moment. So I think it's just a time to take calm, to step back a little bit and see what's going to happen. But we believe that great opportunities are going to come all over the region for the past couple of years.
Yep, just agreeing 100%. It's to your question about verticals and fintech in particular. We are going through this adjustment in the market, which, by the way, is the norm, is not the exception. The exception is that it took now 15 years for us to have one. But the adjustment is normal, and in the Brazilian region, fintech is by far what grew the most in terms of industry or segment within venture. But it's still in the early days. There is a lot to be built. There is a lot to be rebuilt based on the new technologies. So I think it's going to be a very fertile vertical for quite a few years still.
So maybe a couple of stats in the fintech arena, which is where my focus is. Funding is down 70% year over year. Valuations in the public markets are down from a median of, call it 12 to 15 times revenue, down to 3 to 5 times. And in consumer fintech, that's more like 1 to 5 times. So you have a 70% drop in multiples as well. So obviously, fintech had a massive run up in 2020 and 2021. It's seen a massive decline now. And so the question, I think, is how far do we drop? And I think if you look at 2001, if you look at 2009, it took 8 quarters to settle. We're now 4 quarters in. So we probably still have a ways to go before we see multiples return to what they were like in 2020, 2021. It might be years, actually. And so I think what we're seeing now in the market, especially in 2023, certainly in 2022, is nobody knows how to price anything because unless you're in the early stage, I would say later stage companies, there's basically been almost zero deal flow or deals getting done because the pricing question between investors and startups is really still a big question mark, and it probably will be for the rest of the year.
Yeah, I think speaking, it's very different from later stage. Early stage, what we're looking at, particularly looking at a lot of the infrastructure, anything related to Gen AI, automatically double, triple the valuation. And the valuation, at least in North America, we're seeing anywhere from 10 to 20 million still. It's pre-seed and seed. But I think as a venture point of view, zero IPO this year. As Steph mentioned, valuation for later stages have dropped significantly. I think a lot of people are delaying IPO. We're seeing, and at least I predict, will continue to be more and more M&A. And I think now, particularly a lot of the Chinese investors and conglomerates finally opened China. They love LATAM, and I think it's a very interesting region. Zero SPAC, no more. So it's just been a very, very interesting year to start, but I think a lot of things probably will pick up later this year, early 2024.
That's great. So we had a couple of industries mentioned. You talked about finance and AI. What industries do you all see now as most exciting, and what industries do you think might have some uphill battle, some headwinds that they're facing over the next year or so?
Well, rather than like industries, we're a very agnostic fund. So we think Latin America is full of opportunities in terms of there's a lot of problems to be solved, and that's not going to change in the near future. I mean, we're from Latam, so we know how it operates here. But I think there's big opportunities in an aspect of nearshoring, especially in Mexico. The commerce is shifting from Asia to Mexico. There's a lot of things that don't make sense to be exporting over there that makes sense to be doing here in Mexico. But there's also a lot of noise, so we have to figure out what's really there and what's more noise. I know AI is another topic that it's in top of mind, but it's not for free. It's a reality. We believe we're in a game changer situation. Like it was computers at the time. Right now, more than in an industry itself, companies that don't adopt AI into their businesses is like using paper in the 20,000s. So we believe it's a revolutionary thing happening again without the noise of everything's AI and everything is we have to do it with AI. It's more like what can we do with this technology?
Yeah, I think we can break the answers in two. One is like pre-AI and AI, which put short is going to change everything potentially. So, but in terms of the industries themselves, if you look at the ecosystem in Brazil, we had the verticals other than fintech that are not regulated growing, let's say, more naturally a lot, but e-commerce, software B2B, SaaS especially, all these industries are growing nicely. It's more of a secular trend, if you will. Fintech was an exception because there was a big support from the regulatory boards in Brazil, central bank and others. It's by many is considered an example globally. Well, probably UK and Brazil were the two setting better conditions for the startups. And looks like this is now serving as example to other verticals. So insurance is starting to adopt similar trends. Health is in the early days, but should go through a similar path as well. So to agree 100% with you, we have a very long backlog of big problems to address in the region. There is a big infrastructure deficit that is most likely going to be solved with technology. It just makes sense, and it's a tool we are going to have to use. So it's very fertile, if you will. It's an abundance of problems, right?
I think we write usually $1 to $5 million checks, and Google was as Steph and I was talking earlier, Google was the 15th search engine after many years of Yahoo. So in many sense, like what I'm excited about is the infrastructure that empower traditional enterprise be able to leverage LLM. there's still a lot of hallucination happening. You don't know like if ChatGPT is making stuff up. So anything sort of in the infra to get the traditional, could be banking or insurance or hospital, be able to leverage to really use proprietary data to leverage sort of the experience of ChatGPT, great. But I think the generic version of it, the stability on the Anthropic is not there yet.
That's great. So looking beyond just specific industries, we're in LATAM. You were just mentioning Mexico and Brazil. When you're looking globally to invest, and also please focus on LATAM, what regions do you see as having strong growth opportunities? And do you see any regions that might struggle or see a little bit of a downturn in the next couple of years relative to the stronger regions?
I'm kind of like a data geek. So before I came here, I was actually doing a comparison between Brazil and Indonesia. Brazil, 214 million in population. Indonesia is about 270. And the GDP per capita is actually higher in Brazil, 7,500 compared to 4,000. But yet, the mobile penetration is also similar. And you see like their own version of local e-commerce, so from the Gojek, Traveloka, you see the same thing in Brazil. So I'm quite excited about Brazil as the largest country in LATAM. And then at the same time, somehow Brazil is not getting as much buzz compared to Southeast Asia. So I'm hopeful about there's going to be a lot more happening in LATAM, yet the playbook could be very similar to Southeast Asia. That's something that I'm looking forward to learning more.
Yeah, it's interesting. So we only do fintech, as mentioned. So I'll speak from a fintech lens. I really do feel like if you look at crypto and fintech, some of the best opportunities are in emerging markets today. Very clearly, we're seeing leapfrogging of technology and real pain points still unsolved. Also, conversely, I would say a lot of the problems with the payment infrastructure in the US and in developed markets still also aren't solved. We still don't have a real-time rail in the US where we can send payments instantly. It has very low adoption. And I think in many ways, the developed world is kind of playing catch-up to markets like Brazil, which have PIX and other markets that have really invested in newer infrastructure. So I'm still pretty bullish on emerging markets for fintech, and especially for crypto Web3 use cases where there are real needs in the market that the technology is solving versus the US. And then if you layer on the regulatory approach that the SEC is taking in Web3 and crypto, you end up with almost no real innovation that's going to happen there. So I think geographically, if you're investing in those areas, you have to be looking at the rest of the world.
So now that, to change the angle a little bit, so Silicon Valley Bank, we mentioned banks a couple times. I know SBV has been historically such a great partner for many startups, even internationally. What do you see as the economic prospects for startups post SBV?
It's definitely going to hurt, first of all. Venture debt, they were the biggest, FRB and SVB combined were the biggest providers of venture debt to the startup ecosystem globally. That's now disappeared. I am excited about the opportunities and also the second place is founders are now going to have less support because most banks don't understand the balance sheet of a completely illiquid founder that has a ton of net worth, but mainly in equity. And so that's another component where I think there's going to be a massive gap in the short term. I really do think, though, this is a huge opportunity for both incumbents and other startups to fill the gap and serve what will be a gaping hole in the ecosystem.
I want to also bring up venture debt. This is something that's very difficult for traditional banks to willing to borrow to a company for 2 years, 3 years, have no revenue, and Silicon Valley Bank really they were really the bedrock of Silicon Valley, no pun intended. So in that sense, hopefully some of the more traditional banks be able to understand how startups work, Otherwise, it's going to be so difficult to open bank account and be able to operate for many, many startups worldwide.
Yep, I mostly agree. I think just trying to add something to it. I think we all were very worried about the whole setup with SVB and First Republic, no doubt about it. I think right now we are collecting more positives than negatives. I think that both banks are in safe environments now, completely different solutions from one to the other, but the products and services are up and running without a fraction of the uncertainty that we had before. But a big spotlight was shed on the infrastructure that both venture and startups were being offered, ironically, right? Because we do invest in fintech is a big area. There is a lot that can be provided by local and global players around that area. So my perhaps too optimistic view is that it's going to be actually better going forward in terms of products and services for our ecosystem.
So we've talked a lot about kind of some down topics. I want to end on a higher topic, on a happier note. So everyone is very excited about AI. We mentioned it a few times. How do you see AI impacting your industry as venture capitalists and what you do? And how do you see AI affecting your portfolio companies? You don't have to give super specific examples, but if you could share any case studies or whatnot, that would be great.
Yeah, I mean, like I mentioned before, I do believe, and I'm very bullish in the aspect that AI is going to change the way we do business as VCs and the companies we invested in. One very specific thing is companies will probably much less money to operate of what they do now. And there's going to be a lot of technologies coming out in the next 6 months. I don't really go into the next year. In the next couple of months, 6 months, that are going to change the way we do business. So we as VCs, we have to be two things: very insightful of what's noise and what's not, and what's true in AI, and what is a good application of the technology. And the second one is how can we help our portfolio companies integrate this technology into their current businesses? Because if they do it in the stages that we do, that is very early stage, and they grow with these technologies in their embedded in their operations, it's going to be a game changer for sure. I mean, and today it's a game changer. Tomorrow is going to be a need. So if you don't have it, you're going to be 10 steps behind your competition.
Okay. Although it sounds very fancy what we do, but what venture investors actually do can be summarized in three things. One is finding companies, or sourcing, finding companies that you can potentially invest in, selecting which companies do you want to invest, and then after you make the investment, helping these companies grow in the fastest and more sustainable way. More recently, more sustainable than before. But the reality is that AI can easily disrupt the three aspects of it. So it can be very useful in identifying opportunities, and is already, but it will get better and better over time. Selection there is a lot of learning to be done, but definitely even before this big wave, we already had specialized funds, calling it data application or even AI-driven selection process, which I think is going to be tools that all of us will be using more and more, and helping the portfolio company, as you mentioned. I think we have to learn so that we can teach, and everything's going to be very interesting in the next few years for sure.
So it's a secret, but it's not really a secret. But for us, we basically treat GitHub as the app store for developers. And now you'd be surprised. You can literally take a piece of code, put it on ChatGPT, and ask them, how do I actually improve this code?
I've actually done that.
Yeah, and it's amazingly accurate because, working with Microsoft and have the GitHub Copilot really help train a model, which sort of save us a lot of work because our team is mostly engineer, but now they can actually use ChatGPT to help and code review, which is amazing.
I'm most excited about the potential for LLMs and AGI to actually automate a bunch of different things, but I am deeply skeptical, to throw a slightly contrarian opinion potentially, about about where the value is going to accrue. I think the major winner is going to be Microsoft, maybe some of the other incumbents out there. If you're a new startup, your advantage here will be cost and speed, but you don't have data and you don't have distribution. So my existing companies, every single one of my companies in my portfolio is experimenting with LLMs today. And I think it's going to transform everything that we do, but it's not clear to me that the advantage, like from an investor perspective, that a brand new startup is necessarily going to win in all of the categories using AGI. I think in many cases, the most important transition in the next decade will be the ability for existing tech companies to figure out how to integrate all of this new tech into their existing stacks.
My team did try to build a Edith GPT, but it just keep hallucinating and it's talking nonsense. So no, we still have a job, okay?
So we have just a couple minutes left. One last question. So if we're speaking to the founders out there who are looking to maybe get a seed round or a stage A, they're getting started. If they were to come to you, what are the top criteria you would want to look at when deciding if it's an invest or a pass?
I mean, I think in this stage, number one is the team. It's just, I mean, is the people, is this founder, co-founders, the right people that I want to partner for the long run? And that's basically, I don't want to say percentages, but it's a very high percentage, you know? After that, I would look into a market, how the market's growing, if there's an opportunity there. But the most important thing is passionate founders with a solution that they're gonna like really lay for the next 10 years, you know? Because everybody thinks being a founder and an entrepreneur is very sexy and a VC just funded me, but the reality is that it's tough. And yeah, so we're looking at that kind of people, the people that are willing to put everything on the table for what are they gonna solve.
I have nothing to add. It's perfectly put. That's that.
Don't pitch with buzzword just because Gen AI or crypto or Web3 is hot is not going to make a company. So at the end of the day, don't pitch something just because it's a hot thing. At the end of the day, our job is to invest in the company long term, not just at that moment of time.
I invest a little later stage, so typically I am looking for signs of real traction, customer love, revenue. And as you go later, it's kind of like, this is a great analogy, which is like you're flipping cards. So at the seed stage, the first two cards you're flipping are team and market size. This is going to be a big enough business. Then you're flipping revenue, customer engagement. Then you kind of like go down the income statement. So then it becomes about gross margin. Then eventually it becomes about profitability. And like those are two things that we hadn't heard anything about in the past decade, but are now extremely important again, which is you got to have decent gross margins and unit economics, and your company eventually needs to make money. And if we can't see the path to do that, it's going to be pretty tough to invest.
Well, that's great. Thank you so much. This seems like a great spot to end. Thank you all for your wonderful input and sharing everything. If anybody out there is looking for venture capital funding, you have a great crew here to reach out to. If you're looking for content marketing help, feel free to reach out to me. And thank you, everyone, for being here.